Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 30th COT report of this year. And as usual, we're going to start off with the changes in commercials positions. Here we go. You can see we've got the S&P 400 on top of our list with a 14% change in commercials positions. You may see this change being maybe a little bit larger than average, but definitely not that unusual. It is, of course, more of a bullish COT change signal, but the size of it does not seem to be that large. Caution is advised to take that as a signal. But let's jump over to the 5-year chart and see whether there is an extreme in the market that we can act on. The last major extreme was actually a bullish one back over here in early 2016, and since then we've reached these bearish extreme levels. We haven't really gone elsewhere. We're still over there, roughly 30,000 contracts net short in case of commercials, and about 25,000 or maybe even 30,000 contracts in case of large speculators. So that just signals to us that there is an extreme in the market. It's leaning towards the bearish side, and of course we're not surprised to see that when we see prices at these levels. Let's jump over to Feedr Cattle, where we have a 13% change in commercials positions. Again, we're talking about a bit larger than average change size, but nothing too unusual. It is, of course, a bullish COT change signal. Jumping right over to the 5-year chart, you can see that there is an extreme that is visible on this 5-year chart. We have a bearish extreme, and we actually had that for bit of a time now, and you may see there was a bit of a drop in prices from this 160 level down almost to 140. Now we're a little bit up again. Whether this can continue or not, that's the big question here. Maybe not the best market you want to enter at this point in time. So let's jump right over to the Canadian dollar, where we have a 12% change in commercials positions. Here in currencies, these changes of course are already reasonably large, but you may see in the past couple of weeks we've experienced even greater changes that did not affect the price. You may see there was a larger bearish COT change signal back over here than the one 2 weeks afterwards. We had another one without any reaction from the price. So we're just getting these larger changes but without any reaction from the price. So it's really the extreme, and I'm going to jump to the 5-year chart, that may give us a little bit more on what's going to happen. And you may see that the last major extreme was a bullish one, and that was actually a very good signal that pushed prices higher now. And but with these dynamic changes in traders' positions, we are reaching these extreme bearish levels. Now you may see on the 5-year chart that there's still plenty of space left to reach those levels. In case of commercials, that's roughly 150,000 contracts net short, and in case of large speculators, a little bit above 100,000 contracts net long. We're not at those levels, but you may see in the past we don't necessarily have to reach those all-time or close to all-time extreme levels to get a reaction from price, and we've reached these below the zero line levels in case of commercials, or above the zero, meaning net long levels in case of large speculators that already are strong enough to influence the price. Of course, big question with this dynamic rally that we're experiencing right now, what is the best timing? Of course, that's the big question. You may want to look at other traditional technical analysis tools. Let's jump over to large speculators COT Extreme and start off with Mexican Peso, which is on top of our list with a 216 report extreme. Here we go. Here's the 5-year chart, and you may see that extreme right over here. That 216 report means that back over here in 2013 we had that extreme level. You may see that prices have since gone way down. Now we are reaching a bearish extreme level again, and similarly to the Canadian dollar, you can see there's still some space left to reach those levels, talking about 50,000 contracts to add onto the net short level in case of commercials. In case of the large speculators, there's roughly about another 30,000 contracts So we're getting closer and closer to those extremes. We're still at one, and of course the whole report is telling us that prices may not continue this rise for too long time. I mean, it's relative what we consider too long time. I think that it's important to note that these extremes can widen for many weeks or even months before we reach that level where the trend will actually change. Jumping to the dollar index with 172 report extreme and large speculators, and of course the 5 years chart, here we go. You can see that basically large speculators have just gone below the zero line. They're net short. It's actually only small speculators who are optimistic about the market. But if you look at the wider perspective, you can see that we are getting very close to those bullish COT extreme levels that we've witnessed mainly back over here in 2014. We had that in 2012, the end of 2012, and you can see that from those levels prices have gone higher. So I think that we can state that the bullish extreme is becoming very significant. The possibility of a halt in this decline or a possible change in that trend is getting larger and larger day by day. Last but not least, let's talk about orange juice. We have a 92 report extreme over there. Here we go. Everything is more visible on this chart. Yeah, well, it's a pretty obvious picture. You can see that we've reached these bullish extreme levels similarly to early 2015. We are at those levels or close to them. You can see prices actually stopped their decline, jumped back up. Eventually they gone back down again, but you may see how well these relative extremes can help us pinpoint those turning points as well. So one thing's for sure, the price of orange juice has been declining for quite some time now, and as price gone down, you may see the extreme widening towards the bullish side of the market. So again, timing is the big question. One thing's for sure, stress levels are high in orange juice. So that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.